Hey guys, welcome back. Today we are coming up with a problem which is from December 25 tax planning problems. Okay, I've brought two problems today. Okay, which is 3A and 3B, I think. Okay, so let's read the question. Sridhar, a resident individual, age is 42. What are all the things we have to note? Okay, age, regime check. Okay, now we'll write this only 42. Both we have to since we have to plan for a since this is a problem from tax planning, we'll be working out to both normal and 115 BAC. Okay, writing this kind of checkers on the top of the question will save our marks in the exam, since we'll miss out to calculate the tax rate based on the age, or regime will miss out the regime. So this kind of things will help when it comes to DT, right? Okay, what they have said: Sridhar, a resident individual aged 42, furnishes the following particulars of his income relevant for the assessment year 2025-2026. Business income, they said, is 17 lakhs, they have already computed. Long term capital gains, which is 112A. Sale of listed equity share, financial assets we are selling. So sale made in March 2025. Okay, previous year. He also paid life insurance premium of 1,50,000 on 3rd January 2025, and the policy was taken on self in April. Okay, he has taken a policy on 2022. He has paid a premium of 1,50,000. Okay, and the sum assured they have given 10% of sum assured has to be taken, or paid premium, whichever is lower we have to take. We'll work out the working here. And 2 lakh to Prime Minister National Relief Fund. This is a category 1 fund. 100% reduction is given for this. Right, now let's solve the problem quickly. Very simple problem, easy, some marks will get that. Okay, but the thing is, we should not make any mistakes in these kind of simple problems. What we nook and corner, everything, everywhere we have to focus and make the problem correctly. Now, particulars: normal 115 BAC, special default tax regime. Okay, what's the PGBP income taxable in both the regime? 17 lakhs. Then LTCG. Okay, LTCG, sale of listed equity shares, which is 112A. Okay, the taxable amount is 1,20,000. Okay, is there any other income? We don't have any other income. Let's total this up. 18,20,000 is our GTI, which is gross total income, minus chapter 6A deductions. What are all the deductions we have in here? He has paid the life insurance premium taken on self. Only self life insurance premium we taken on self or spouse or dependent or independent children only allowed under section 80C. Okay, so he has taken on self, it is allowed, but there is a limit. Okay, LIC premium paid. How much he paid? 1,50,000 or 10% of sum assured. 10% of 12 lakhs, which is 1,20,000. Whichever is lower is allowed as deduction. 1,20,000. 80C not applicable for 115 BAC. Any other? 2 lakhs, 2 lakh to Prime Minister National Relief Fund. Okay, this is 80G deductions. 80G deductions also not allowed for 115 BAC. 80G, okay, which is 2 lakh. This is also not allowed. What's the total income? Total income is 18,20,000 minus 1,20,000 minus 2 lakh, which is 15 lakhs is the total income as per normal tax regime. As per 115 BAC, 18 lakh 20,000 is the total income. Right, now we have to find out the tax liability on this income. We cannot directly apply these slab rates on this income since we have a special income which is no LTCG 112A. The tax rate for LTCG 112A is if it is no long-term capital gain, if the basic exemption limit given for LTCG at 1 lakh till 1,25,000, more than 1,25,000, 12.5% is the tax rate. Since there is no crossing of income happen, we should not tax this income. Okay, this is fully exempted, so we have to calculate tax only on this amount only. Okay, now from this amount we have to deduct 1,20,000, 1,20,000. Then what will be our adjusted total income? Adjusted total income will be 15 lakh minus 1,20,000, which is 13,80,000. This will become 17 lakhs. So this is our adjusted total income. We have to calculate tax on this. Tax at slab rates. Okay, till age is 42, right? So till 10 lakhs, 1 lakh 12,500 plus 3,80,000 into 30% plus 1,500 into 104%, which is 2,35,560 is the tax on adjusted total income of normal provisions. If it comes to special tax rates, then 4 to 8, 8 to 12, 12 to 16, 1 lakh at 5, 10, 15, 20. Okay, percentage. Okay, 20 plus 40 plus 60, 1,20,000, 1 lakh into 1,40,000 into 20K, 40K, 60K, 20K. Total 1,000, 40,000, 60,000, 20,000 into 104%, which is 1,45,600 is the tax liability. That is, this is as per new regime. Okay, that's it. The problem is over. We can give since the old is much higher tax, having much higher tax liability than 150 BAC. The resident individuals either can opt for 115 BAC for the lesser tax liability. Okay, let's move on to the next problem. RTP Limited. Okay, resident box regime. Okay, resident. Okay, regime not applicable here. Okay, now resident, RTP limited. Okay, it's a domestic company incorporated and operational from May 2020. It has been assessed to tax as per normal provisions. It started paying tax as per normal tax provisions at 30 percentage. The board of directors of the company want you to take note of the following data and suggest whether to continue the same or opt for section 115 BAB of the act. The company's income from the business for the year ended. Okay, income for the business is 15 lakhs, sorry, 1500 lakhs before the deduction. We'll just do the deductions and we'll have to check whether section 115 BAB is having a better lesser tax liability than the normal provisions. But we have to take one note that 115 BAB is the 115 BAB is the provision where the company has paid tax at the concessional tax rates. The business has to be commenced from setup or registration should be done on or before, sorry, on or setup or registration on or after 1/4/2019. Okay, but the commencement of the business should be before or equal to 31/3/2024. Okay, since the timelines are matching, but the company is not eligible because the company has to be taken the 115 BAB on the first year of tax return itself. The company has to opt while filing their first year return itself. The company has to opt for 115 BAB. If the company missed to chose the 115 BAB in the first year, the company is not eligible for the concessional tax rate of 115 BAB at 22% at 15% at any point of lifetime in the company's existence. So 15% tax rate is not possible for this company. So we don't need to calculate for this. We have to calculate only the tax rate at 30%, which is usual normal tax provisions. What's the company's total PGBB income? So not a PGBB income, business income 1500 lakhs minus deductions. What are the additional depreciation as per tax only? So we can deduct 125 minus brought forward loss of assessment year 2024. Okay, 700. Then we can find out the gross total income of the company, which is 1500 minus 125 minus 700, which is 675 is the gross total income minus deduction as per chapter 6A. JJ80 JJAA. This is applicable for the normal provisions since the company has newly appointed or increased the labor force than the base. In the deduction under 80 JJAA will be applicable, and 50 is the deduction they are claiming. And for ATM intercompany dividends, they have given amount, so we don't need to do anything. It's lower of dividend received and dividend paid is considered. So they have directly given, we don't know to work out anything. 25. So what's the total income? 675 minus 25 minus 50, which is 600 is the total income. What's the tax liability at 30% plus HEC at 4%? 600 into 130%. into 104%, which is 811.2. Before that, we have to calculate the surcharge also. Since the company is crossed more than 1 crore but not exceeded 10 crore, so we have to apply the surcharge of 7%. Okay, 600 into 130% into 107% into 104%, which is, okay, 600 into 30% tax 180 into 107% into 104%, which is 200.304 is the tax liability. That's it. The problem is over. Thank you.